The world leader in mixed martial arts, known as the UFC Ultimate Fighting Championship, is finally part of an investable stock. And I know I worded that a little bit weird. It's because the UFC themselves are not public, but they are owned by a company, a parent company, that actually just went public through an IPO about a month ago. And so if you're like me and you've been waiting for your chance to have some exposure to the UFC, because in my opinion, I do think that they're going to become much larger in the future with the growing popularity of mixed martial arts. Well, you finally have your chance to do so by purchasing the parent company stock known as Endeavor, ticker symbol EDR. That's actually exactly what I've just done myself. However, they don't just own the UFC. There's a bunch of different things under that umbrella of Endeavor. So in today's video, we're going to talk about the company, what they own. We're going to take a look at their financials. We're going to try to predict where the company and the stock is headed in the future. And then I'll explain why I purchased the stock myself and what type of play I'm trying to kind of make with it, what I plan to do with them in the future. So should be a fun video. I hope you guys enjoy this. And if you do appreciate this kind of update on a move that I made in the market, then please consider hitting the like button. Really helps the channel and it means a lot to me. But with all that said, let's go ahead and just jump straight into this. Okay, so let's start with a quick intro into what Endeavor is and talk a little bit about the stock itself. Now, like I mentioned before, Endeavor does own the UFC. In fact, they had already owned a majority stake before going public, but included in the IPO was actually a deal to acquire the remaining shares of the UFC. Keep in mind though, Endeavor is a very large company that handles a ton of different things. And to be honest, I'm not the biggest fan of that because it can get a little complicated. And I think investors find this company really hard to understand, but I'll do my best to break down some of this for you. And just to list a few things kind of right off the bat here, they handle talent representation. In fact, they literally own the world's largest talent agency in William Morris, which was founded all the way back in 1898 before finally being merged with a newer company in 2009 to form Endeavor. But they also handle sports operations. They do tons of different events from sports to music and more. They do media production and distribution. They handle a ton of marketing, and they even do brand licensing and generate a lot of money from those fees. Again, it's kind of hard to explain all the different parts, but just to give you an example, in their prospectus, which is just kind of like the legal document that a company files when they're trying to go public, they kind of detail the company and highlight some of their strengths too. But in there, they claim that they were named Music Touring Agency of the Year by Billboard with over 37,000 concerts. They represented clients that won more Grammy Awards than any other agency in both 2019 and 2020. And over the past several years, they claim to have won the most Oscars as well, while also being involved in the top 10 highest grossing films in the US. I'm talking about like talent representation and things like that. Now, they also provide brand licensing for their own companies in the UFC, which is a mixed martial arts company, obviously, and PBR, which is one of the largest bull riding companies in the world. But they also represent tons of other giant companies like Anheuser-Busch, Jeep, Lamborghini, the Fortnite video game, Harvard, Gap, and even the NFL. I'm talking about licensing and different things like that. They handle all that stuff and they collect a lot of fees from it. Now, as if all of those things weren't enough, Endeavor also even owns the Miss Universe pageant, and something that I found super interesting is that Elon Musk from Tesla, he recently joined Endeavor's board of directors. That's pretty crazy. And by the way, Musk's current girlfriend Grimes, she's actually represented by Endeavor too through their talent agency. So that's kind of interesting. I found that interesting as well. Now, they didn't go into heavy detail on why they're adding Musk to the board, but they did note in their filing that he brings a professional background and experience in running a public company, as well as previously holding senior level executive positions, and they noted that his service on other public company boards and his experience starting, growing, and integrating businesses would really help Endeavor, which is all true, by the way. Musk has now grown Tesla, among other companies, from basically the ground up into giant disruptors that may eventually dominate their respective markets in the future, and I have a lot of respect for Musk myself. And if there's one thing that we know about Elon Musk, is that he's an expert at raising money and growing a business, which we'll talk about in just a second when we cover Endeavor's financials, their lack of profitability, and their future potential. But before we do that, I just want to quickly show you the stock. So they IPO'd right around the end of April for around $24 a share, which I believe valued the company at around $6 billion or so, somewhere around those that range. And from there, the stock shot up to as much as like $33 a share, which was a huge increase of over 40%. But since then, the stock did actually correct back down to around $28 at the time of this recording, leaving it now around the midpoint of their trading range and currently down about 15% from those highs, although still around 20% higher from the lows. So that's who this company is and where the stock is currently trading. But what does all of this mean for the future, and is it a decent long-term stock to own? Well, to give my opinion on those things, we're going to have to dig a little deeper. We need to know their financials. We're going to want to take a look at how much money they're losing, what kind of growth do they typically experience, and what is the future potential for their various markets that they currently operate in. So let's quickly cover those right now, and then I'll finish up the video with my overall conclusion. Well, when looking at the financials, we know that sales were growing by very large amounts up until the global health crisis of 2020 that destroyed the world economy. But in 2018, sales soared by 20% and then managed to still grow by even more in 2019 by about 27%. But because of the pepperoni lockdowns in 2020, revenue proceeded to crash by around 24% that year. But in my opinion, that's completely reasonable since we know that this type of company and the markets that they operate in are heavily dependent on things like huge sporting events that were completely shut down throughout the year. And then on top of that, they manage huge celebrities that virtually had zero work since a ton of movies and shows were postponed for months in many cases. So really, for their sales to only drop by around 24%, considering the disastrous year it was, I mean, that's really not that bad. I definitely could have, imagined a lot worse for that. Now, I understand that they're not currently profitable. Their net income is negative by hundreds of millions of dollars every single year, and it's essentially been getting worse. But a couple of things that we should note on that. First of all, 2020 shouldn't really count because it was literally the worst possible event or year that could have ever happened to them. And second, you have to consider that the stage that they're in right now, it's a company that is still investing heavily in acquisitions and restructurings, and it's trying to figure out new ways to grow, which is all very common for these type of companies. And when you account for those one-time expenses and just look at their adjusted EBITDA, which is earnings before interest, taxes, depreciation, and amortization, they've actually been profitable by hundreds of millions of dollars. And we could even go a step further and just look at their operating cash flow to see how their raw business is functioning right now, just kind of at an operational level, which, by the way, is what I like to primarily look at with these type of companies that are in the early stages of growth. And sure, they have their ups and downs, but every year has been positive, with 2019 seeing explosive growth of over 200%, which kind of proves that they do have a lot of growth potential. And even 2020 was still positive despite a huge plunge in sales. I mean, all of this is pretty good when you consider all the circumstances and where they are at this kind of early stage of their business. Speaking of which, how does their business break down? Well, unfortunately, there's not a lot of information that I could find on this, which is usually the case with newly public companies. We usually have to wait for a few earnings reports to really start to understand the business in a deeper way. But from their perspectives, we know that the UFC, in combination with PBR and the EuroLeague of basketball, only made up around a fifth of all their sales, while events, experiences, and licensing rights from their other companies made up around 43%, which is also heavily impacted by the global health issue, and then around 36% was made up from talent representation. Obviously, all of these different parts of their business are going to be destroyed by a collapsed global economy due to lockdowns, but with the ramp up of V-shots and with things opening back up, I do think that things could really start to improve, and I think they could see some pretty strong growth in the years ahead coming out of it, especially with all the pent-up demand for people to go to events. I mean, look at the UFC. They've already started doing live events again, and they literally sold out giant arenas in both Florida and Texas. And with the UFC, along with PBR and EuroLeague only making up around 20% of their sales, I just think there's huge room for growth there, especially after acquiring the rest of the UFC. In fact, Forbes claims that mixed martial arts are already the third most popular sport in the world, only behind basketball and soccer, and yet The Guardian claims that it's still the fastest growing sport in the world as well. But despite that, back in 2018, UFC president Dana White claimed that the UFC was only worth around $7 billion, which, mind you, was literally years ago, and yet today, Endeavor's total market cap is just barely above that. And again, the UFC doesn't even make up 20% of their sales. So I don't know, based on this math that I'm looking at here, the market cap for Endeavor should probably be a lot higher just because of the UFC. Now, granted, when you add on debt, their enterprise value is closer to like 13 billion, which is a concern investors have on these type of companies since they always carry high levels of debt. But still, I think if I wanted to own UFC stock, this would be the way to do it. And I know technically this is the only way to do it, but I kind of just look at it as I really like the UFC brand. It's something that I really enjoy, and I really want to be a part of it and invest in that brand and in that company. And so if I was to kind of look at it, if you came to me like in the early stages of, let's say, the NBA, and I really liked the NBA, I was really into basketball, and I really wanted to own stock in the NBA, and you said, okay, you can buy some NBA stock in kind of the early stages of the NBA, but you're also going to have to own the other parts of Endeavor's business. I would definitely take that deal. And look, I don't love Endeavor's other parts of their business. I wish I could just only own UFC stock, but it's not like Endeavor's other properties are just failing companies or failing businesses. I mean, they are the world leader in terms of a talent agency, so there is some value there too. And granted, the whole global health issue has really hurt Endeavor's business in many different ways, and I don't like the fact that they're so heavily exposed to those type of events. But I think that we're going to see a big recovery from that. I think there's going to be a lot of pent-up demand from people wanting to go out to sporting events and do all kinds of different things. So I think we're going to be more on the recovery side of things with Endeavor. I think the stock is going to be extremely volatile still. This is a company that, kind of struggles with profitability depending on how you look at it. And of course, we're still kind of dealing with the global health issue, even though, like I said, I do think we're on the recovery side of things, but we're still kind of trying to get out of it. So there are going to be some hiccups. There's going to be some road bumps and some things that will kind of make Endeavor stumble a little bit. And that's going to cause for a very volatile stock. And we're still kind of in the early stages of it, and they just went public. So we still really need to see more from them. We need to see more earnings reports and see how their business is doing. Investors are not going to know how to price the stock and how to value it. That's going to lead to a very volatile stock. Don't be surprised one day it's down 10%, the next day it's up 5%. I mean, in just single day kind of swings. So this might be like a swing trader's dream stock. I don't know, but I'm personally not that. I'm a long-term investor. However, I can't really look at this as a long-term actual investment because it does have a lot of risk. They have debt and they struggle with profitability, and they're still kind of brand new where I'm still trying to understand their business. So I see it more as like a long-term kind of gamble or speculative play. And so for that reason, I only purchased a very small amount of the stock at around $28 a share, around where they're trading right now. I purchased a very small amount. It's less than 1% of my portfolio, and I really don't think it's going to be more than 1% of my portfolio going forward. Because if I keep it small, then if the stock happens to crash in the future, well, then it's very easy for me to just buy a lot more and lower my cost basis, assuming that I still like the company. And if the stock just kind of skyrockets from here and I lost that kind of a chance to buy more of the stock at lower prices, well, maybe by that time I know a lot more about Endeavor and their business and their different properties, and maybe by that time I feel more comfortable investing in Endeavor, and then I'd be willing to pay a premium anyway. So I think this is the type of stock where, for me, my thought process is, well, I really like the brand. I really want exposure to the UFC. I just want to own it. It's the type of stock I want to own. My gut tells me that it's going to be volatile. It'll probably even go down from here, to be honest. But I want to dip my toes. I want to have something in it, and then kind of adjust as we go forward. If the stock goes down, I can buy more. If the stock goes up, maybe I'm willing to pay a premium because I know more about the company, and that's just the way I'm looking at it. So I'm going to be looking forward to the earnings reports, and I'm going to look forward to researching the company more and getting to know their businesses, and I think that's going to actually be a lot of fun. So I'm pretty excited about this stock. No matter where it goes from here, I think it's going to be fun for me, and I think I'm going to enjoy it. So anyway, those are my thoughts on Endeavor stock. Let me know how you guys feel about this one. Hopefully I didn't leave anything out. I'm just kind of checking my notes, but I think I covered the basics of it. If you guys are interested in buying the stock or anything like that, let me know down below. Or if you think it's a bad investment, shouldn't be touching it, let me know that as well. I'm sure there's going to be a lot of varying opinions on this one. But regardless, I hope you guys enjoyed the video. And if you did, hit that like button, and I will catch you guys in the next one. Take care. Bye-bye.